Hello. There you guys are. What's going on? Still got my eye thing. Don't know when I'm gonna get that removed. My eyes are also super itchy. I think I got like really bad allergies or something, and I haven't figured out what the cause is. Anyway, let's talk stocks. Some updates on all of my names. Let's start with Yext, my biggest position. It's about a 30% position. They reported earnings on Monday. They beat on EBITDA. They beat on revenue. The only thing that I thought that I would have liked to seen better, but I don't know what expectations were internally, was ARR, which was essentially flat, down like 0.5% quarter over quarter. I would like to see that growing, but that was barely growing the previous quarter, quarter over quarter. I think it was up like 1% or something. Their net retention rate was 95%, which is the same net retention rate it was the previous quarter, and it's up from, I believe, 92% a year earlier. And no guidance, no other commentary on the business. And where are we? So the stock, for whatever reason, is lower from where it was a week or two ago. It's 860, 865 right now. And I continue to think this is very mispriced. So, you can go through your hypotheticals of what could happen here. In the worst case scenario, there's no third party interest, right? So the only bidder is the CEO and his partners. And you then have to come up with what price he has to get to in order to get the board. And remember, there's an activist shareholder on the board, okay with signing off on that sale. I have been doing this a long time, and I've never seen a management buyout succeed at under a 25% unaffected premium price. Usually they have to be in the 30 to 40 to 50% area to work. But a 25% premium would be unheard of, really. The stock was trading in the low eights before he made his bid. And on the same day, he pre-announced earnings that beat both EBITDA and beat both revenue by a pretty material amount, given the history of the business. It's a pretty easy business to forecast given the recurring revenue nature. And he beat EBITDA by, I think, $1.5 million and revenue by $2 million. So we don't even know what the unaffected is. The unaffected could be 815. The unaffected could be 850. It's certainly not below 815. The $9 bid was about a 10 or 11% premium to that 815. If he was to pay $10 a share, that would be something along the lines of a 20% or low 20s premium. To me, that is the absolute worst outcome here, is that he buys it for $10 a share, which I don't think is likely. I think that the likely price should be well north of that, more like $10.50 or $11 a share. And that would only be if there's no third-party interest in the company. So what are you risking? Well, you can say you're only risking 25 or 30 cents to get you down to where it was before his bid. But that's not really intellectually honest, because if the business falls apart in the next 3 or 4 months, or the economy falls apart, he's going to pull his bid and the stock's going to go much below 815, 810, 820, whatever. So you have to come up with the percentage odds of that happening, which I think is extraordinarily low, but whatever, 10, 15% chance. And then finally, you have to come up with a percent chance that the board doesn't agree to whatever his best price is. And that his best price, if it is $10, is not enough for the board to sign off on. And that outcome, I think, is pretty low. Okay. He's been on the board since 2009, and they put him in as CEO in 2022. And he knows all the board members. And you have this activist shareholder on the board. And the company already has bankers and lawyers hired for the special committee the day he made this bid. So in my mind, this is a friendly transaction with the board, and they're going to do, um, really what is right for him and right for shareholders. And they don't need much cover to sell at $10. The stock's 865, trading below his $9 bid. Bankers can point to this and say $10 is a huge premium for where it's trading right now. Again, still no 25, 30, 35, 40% premium, but still a premium nonetheless. So I'm less worried about the board not agreeing to whatever his best price is. I'm also not worried that $9 is his best price. Okay. You don't buy companies at 8, 9% premiums to unaffected. Just doesn't happen. And he simply just wanted to lock in the unaffected price, put in the $9 bid, and then the general idea would be that whenever he buys it for 10.50 or 11 or whatever, he can say he bumped, by 20% from his $9 bid, and it's a 25% premium, 28% premium from the unaffected, which again isn't even really the unaffected, because there's been material news that day which is pre-announcing earnings beating both bottom and top line. If you do some work on this Michael Walrath guy, this guy's a total shark. He didn't sell just one company for $850 million. He sold two companies for $850 million. I was unaware of that. So here's an article that talks about him and his business partners. The first company was Right Media, which he sold in 2007 to Yahoo. It says for 680 million, but that's only because they only sold 80% of it to Yahoo in 2007. Yahoo bought 20% of it, I think, a year earlier. And then he sold this Moat for 850 million in 2017 with his two partners. And if you do some research on the Right Media, there was only one raise before that sale to Yahoo, and I think they raised like $10 million. So these guys are very wealthy. He also owns a golf club, like a 3,500 acre golf club. And you can read in the New York Times from 2014 that he has two helicopters, and he's a serial entrepreneur and likes to seed tons of companies. So here's the New York Times article. I'll send it to you right now. Hold on. He's loaded. So he's worth hundreds of millions of dollars. So my guess is his partners, these brothers, are also going to bankroll the deal with him. And then he probably has another financial source besides that. You also can go on YouTube and you can find a half a dozen YouTubes this guy has done. He loves to talk, and he loves to talk about the business. So in fact, I find new ones all the time. He just did a YouTube 3 months. Sorry about that. I haven't even watched this yet. This one is from 3 months ago. And you could find one he did just a month ago right here. And then there's multiple other ones he did over the last 12 or 18 months. So, some of the questions I've gotten on Twitter are that they're skeptical of the offer being real because there's no SEC filing. This is just false. He doesn't own 5% of the company. He doesn't have to file a 13D. They think he's just trying to put the company in play so he can cash out. This just doesn't make any sense. The guy's worth hundreds of millions of dollars. He's been involved with the company since 2009. The company did a process in 2014. In June of 2014, there was a Reuters article that they were soliciting bids. Nothing came about it. It was a private process. So they've clearly done things in the dark before. There's no reason to put a company in play like this. They can solicit interest privately versus a public auction like this. It's not a stalking horse bid. I think he generally does want to buy the company. He's shown no signs that he's not for real, and I just don't think he's messing around. So For me, the way I the way I look at it is this. So if it's really going to be sold for $11 to him, he could have went another route, right? And I ask you where the stock would be trading. So let's say he bid 10.25 when the stock was trading 8, 15. If you bid 10.25, where would the stock be trading today? It wouldn't be trading 8.65. It'd be trading 10, 10.25, 10.40. And then the bump would be to 11 and you'd get the deal done, right? The reason why the opportunity exists here is because this is not the order it usually goes in, right? Usually it's not a very small premium initially, and then you do the regular full bump on the second final purchase price. Usually, like Surgery Partners, for instance, they bid 25% higher than unaffected. Target Hospitality, I think, bid 30% higher than unaffected. Both those deals didn't even go through. They both broke. But in this case, he bid 8 or 9% off unaffected, 10% off unaffected. What's the timeline? They already have bankers hired. They had bankers hired day one. So I don't know how it takes longer than 90 days from then. It won't take very long to vet out whether or not there's other interested buyers. 45 days, 60 days at the most to solicit interest from external, third parties. And then what? Another 30 days to finalize at most the price from him. They went dark. There's no conference calls anymore. So I find it hard to believe we'll get to the December earnings and it won't be a deal or a break. And I find it really hard to see how there'll be a break. I would put somewhere between 80 and 90% chance of this transacting at a price of no less than 10. But honestly, if I was wagering with you, I would say it wouldn't go lower than 10.50 if I had to place a bet. And then if a third party is interested, which I don't think is super likely, but if a third party comes in, you can get anywhere in, the 11, 12s, 13s, whatever. So that's Yext. And where it should be trading today? I think it should be 9.50. I think it should be 9.50 with the expectation of a 10.25 to 10.50 deal in kind of the worst case outcome with an 80% likelihood of that happening. And then you have kind of a 5 to 10% chance it's a blowout price. And then you have the 10, 15% chance the deal breaks. And if the deal breaks because the business is so valuable and, the activist board member won't agree to $11, then maybe your break isn't 8.15. Maybe your break's higher. But in my mind, the conservative way to look at it is the break is because the economy falls apart and he doesn't want to buy it anymore. So you have to have a more conservative break price of whatever, $7 or something. The world seems to be ending generally. Is the reason he needs to do this sooner than later? That's a great question. I think the business is at an inflection point. So this isn't going to be like wide open west, right? This isn't going to take 18 months. They don't usually take 9 months. They take 3 to 4 months. And if he really does, you should watch the YouTubes I sent. And in his mind, AI is a huge tailwind for this company, not a headwind, right? They're helping companies deal with how search is changing from Google to AI. That's their business. The new world of the 3 different, AI bots and how you get your business information from a local perspective on those bots and accurate. I mean, that's what they do. So I think if that inflection is going to happen and it's showing up in the numbers, it isn't showing up on top line yet. He wants this to be done before it shows up because it's only trading at under 3 times ARR. And they're doing well over 100 million of EBITDA. There's a lot of stock-based comp, so I want to be intellectually honest about that. But it's hard to know exactly what the stock-based comp is because a lot of that is previously granted PSUs and RSUs when the stock price was much higher from 2 or 3 or 4 years ago. and that expenses out today at the prices that they were issued at. But regardless, the adjusted EBITDA is like 100 is run rating at like 110 million of EBITDA. And I don't know, it's like $1 billion, $1.1 billion kind of business. It's not expensive, right? Even on a free cash flow basis, if you want to knock 50 million of stock-based comp, it's probably doing a 5% free cash flow yield after stock-based comp, you know. And if it's really at an inflection point, that's really cheap, right? They talk about wanting to be a Rule of 40 company. And currently the EBITDA margin is like 22, 23%, and there's no real revenue growth. So to get to a Rule of 40, I mean, the business is going to be ridiculously more better valued. Huge multiple we put on it if that happens, right? If they can get the revenue growth of mid-high single digits or double digits on top of 25% EBITDA margin. That's the only way you get to Rule of 40. It's a mixture of revenue growth and your EBITDA margin. So yeah, no, I do think that he is in a rush to complete this. I don't think I would be shocked if this is still around as a open process by the end of the year. I think if it breaks, it breaks, by the end of December, probably by earnings, or we get a deal by earnings. All right, next, PRTA. PRTA is an interesting one. I still love it. I have about 20% position in that, so it's down from my peak, but the stock's gone up a lot. I haven't sold any stock in the last 4 weeks. I have two issues with PRTA. If I could put my cynical hat on. The first one is I don't understand why the company and management aren't just saying they are going to return all the capital next year once their phase 1 trial with BMY is over, right? They're kind of dancing around what they're going to do as a going concern. And once the BMY phase 1 trial is over in Q1, they have no business. There's nothing left. All the trials are going to be run by partners. So I don't know what the point is of not coming out and just saying we're either going to sell the company or we're going to wind down to a holdco and give you the money back. And they're simply not saying that, right? If you go listen to the last fireside chat, they're saying all the right things without giving you the exact details of how much money they're going to return and when. And if you talk to the company privately, they're also saying numbers south of $350 million. So where's the money going to go? They're also telling you that they're not going to buy anything and they're not going to in-license anything. So what are the catalysts here, right? Obviously, if they get the buyback in place, they have to do a Irish shareholder meeting to authorize the buyback. Once that buyback's in place, it should create a very nice tailwind for the stock, right? Even if they only buy back $50 or $100 million worth of stock, that's a huge number of shares, right? That's like 7 to 14 million shares on a pretty thin stock. And the people that own this now, I think, are kind of in it, right? They're in it for a quote unquote liquidation or to own the partner programs in the out years. I'm very bullish on the partner programs. So just to recap really quickly, the main partner program is the Roche program in Parkinson's. And that has a very high probability of success based on what the last 2 trials did, probably north of 75%. And if that does hit out positive and shows a clinically, meaningful effect, which I think it will if they make the trial long enough, it's a multi-billion-dollar drug. And they get high double-digit revenues, royalties from it. So it's worth, potentially low billions, low single-digit billions to Prothena. The other big trial they have is this BMY phase 2 trial that will read out in 2027, excuse me. And that has a decent probability of success. If you look behind the curtains, that originally had a functional endpoint and they changed it to a biomarker. And they're also running a phase 1 trial trying to see if it works with injection versus IV. So I think they're seeing something blinded. They know it's better from a commercial standpoint to have an injection versus an IV. And if they can prove in that phase 1 trial that they get the same pharmacological benefits in healthy volunteers from the injection versus the IV, my guess is the next thing they would do is launch another phase 2 trial with an injection versus an IV so that it's a more commercially friendly product. But that would be a multi-million-dollar drug if that works. And then, of course, you have the Novo Nordisk ATTR-CM drug. That's worth much less because there's no royalties, but that's entering phase 3. And that's worth probably NPV of 100, $150 million, which is, $2, $3 a share. And there's $6.20 a share in cash at the end of this year on an $8.30 stock. So your margin of safety is huge. I don't know what the path is for the stock to go up outside of a big capital return and then being more explicit about the wind down. I think we'll hear more about that towards the end of this year and Q1. Then you also have a complete wild card if they could partner any of their other programs or if they could partner any of their technology. If they did that, that's found money and the stock goes up a lot. So in this environment, I mean, that kind of stock is great, right? Huge margin of safety with the cash, multiple partner programs, all are uncorrelated to each other. They've already done tons of layoffs, and your risk is that they blow some of that money on something, but I don't know what they could blow it on. Probably they're saying they return money but less than 350. Are they saying when or how? Yes. So they're saying they prefer a buyback. That's what they want right now is a buyback. And the numbers they're throwing out are in the $50 to $100 million range. And again, I don't know why, right? I don't know why they only want to return 50 to 100 million if they have 350 million. I don't know where the rest of the money is going to go. So, that would be where my skeptic hat comes in. And I've shared this with them privately. And if you're a shareholder of Prothena, you should ask them, where's the money going to go? Why do you need $350 million? Why aren't you going to return it all, by the end of Q1 2026 after the BMY phase 1 trial is over? They could do it now. They don't need all this money. So I'm confident that their shareholder base will keep their feet to the fire and, the money won't be burned. Again, they're doing mostly the right things, right? They did huge layoffs. They are saying they will not spend any money on 012. It all has to be through partners. There's no R&D spending happening. All these things are all positive. But on the flip side, they're going to conferences, trying to get new investors for some reason, which you don't need to do if you're winding down or selling yourself. They still have an investor relations guy. They don't need an investor relations guy. He should be fired. It's now September 12th. The phase 3 trial failed in the middle of May. So this is month 4 since the phase 3 trial failed. I would think they're pretty far along in whatever their strategic process is. And, maybe we'll get lucky. Maybe they'll sell the whole company. I don't think that's likely given the assets, but I feel highly confident that the margin of safety is here. I still think this stock should be trading like at $11, $12 because I think there's just so much value in those partnered programs. And the burn is going to, even if what is the worst thing that could happen? The worst thing that could happen is we enter 2016. They say that they're going to start buying back stock. And they say they're going to keep these employees they have left, which is like 70 or 60, employees with no programs. If they did that, I think the annual burn would be like $30, $40 million on 350 million cash balance. Again, I don't even know what they would be spending the money on or what they'd be doing. But even if that happened, they couldn't burn through the money. So the money's there. The money seems relatively safe. And I do think that whatever they end up doing with it will be accretive and friendly to shareholders. I just don't understand why they're being coy about it, why they're not coming out and saying it. And again, privately, they're saying much less. They're saying less than $100 million. Why? Then they won't answer me. I can't get an answer from them. So those aren't the things that you say if you're a good actor, right? So I'm just being straightforward with everybody here. I have not sold my stock. I own a lot of stock because I believe in the assets and I believe in the value there. So It's never easy, right? I thought it was going to be super easy, but now I'm a little bit more skeptical about how this is going to play out, at least from a very easy perspective, where we just wake up one day to we're firing everybody, here's your money back, and you now have a holdco. I'm skeptical we're going to see that here, but hopefully I'm wrong, you know. And I really do like the idea. Like if the stock went to 750, I'd buy more because of the margin of safety. So again, I'm not advocating that that I'm bearish on it by any means. I just don't know what the catalyst is to make it go higher until the buyback is active. When the buyback's active, I think the stock could go a lot higher because I think that you're going to have this perma bid from the capital return, and you're not going to really have a lot of sellers in the stock. Anyway, that's PRTA. On Yext, if the company truly is an AI beneficiary that the market is valuing more like an AI loser, isn't the risk that the bid ask with the special committee is very large? I don't think so, because I think they're friendly. I think the special committee are all board members that this CEO has been on the board with, many of them for a decade. And, the public market is telling you that they don't value it as an AI beneficiary. And it's also not in the numbers, right? The revenue's not even growing outside of their M&A. So the risk would be that whatever the 10% holder wants to do, my guess is the board does. And I don't think the CEO would have even gone forward with this route unless he had conversations already with that guy and that he was friendly or open to a sale, because you need to have him on your side to get this done. And it's been kind of a really shitty stock. I mean, it went public in like 2017 or something. Go look at the stock chart of this thing. It's been a disaster. Now, this is not the same company that it was when it went public in 2017 or when it got founded in 2009 or 2007. Okay. They totally transformed the business. But I'm just saying it has not been a good ride for shareholders. But I do think that the CEO has a very friendly board of directors. And if they do a full process and there are no other bids, and that 10% holder is a willing seller, then there should be no problem getting to a fair price that 10% holder is happy with. And by the way, that we're all happy with, right? I mean, if he sells it for $10 or $10.50, the arbs that are in this right now would be pretty happy. So I think the bigger risk would be if the stock was trading much higher, right? The stock's trading 11, the stock's trading 11.50, the stock's trading 12. Then of course the committee can't agree to a take under there. But it's not. And it's also, he's pretty transparent about the business and about what he sees as the future of Yext and about AI, right? He's doing these podcasts every month. So I don't think he's trying to hide anything, and the stock doesn't value it. So I just don't see a big risk that the committee rejects his final bid. And I also don't see a risk that he doesn't have in his pocket a $10 or higher final bid. I think both of those things are likely. Committee taking it, and that he has a real bid that's way higher than $9. Forward, FWRD, that's getting to payday, I think. We're sitting here Friday, September 12th. They definitely got their final round bids this week or last week. One thing I like about this a lot is I see two reasons why I think it's very likely these final bids come in with a clearing price that results in a sale, okay? I did a short YouTube about this last week, but a board of director member resigned on August 28th, who was one of the venture capital guys that was involved in the Omni deal. And they own like 2% of the company or something like that, a small amount. He resigned, and they had the right to appoint another board member, and he declined. They declined to do that. And this is a focused venture capital firm. Sorry, a private equity firm. All they do is logistics. And this guy's a total shark. He used to work at like SAC or at not SAC, but actually it might have been SAC, but Tiger. He used to work at Tiger, and I think also SAC. He's a total industry shark, hedge fund guy, and he now works for this private equity firm. And the more I thought about it over the last week and a half, there's an extremely high likelihood that he resigned at the end of August with line of sight into the company being sold. Why is that? Okay. There's really only three possibilities. I talked about this in my video, but I'll be very brief. Okay. The first possibility is he has line of sight into a break coming. So he thinks that the process is going to falter, and he resigned from the board so that they can sell their stock on the break at $20, $18, $22, whatever. Okay. By the way, he might also still be restricted because he has material non-public information. He couldn't even sell stock until after they report the next quarter's earnings, which is likely. But let's say that's possibility A. Okay. Possibility B is that he knows there's multiple bidders left. He knows that from being on the board that whatever that bidding price is going to be, its clearing price is going to be enough to agree to. There was already a first round, mind you, so they know what the indication of bids is and the level is. He knows there's multiple bidders left, and the odds that one of them comes through with a final purchase is extraordinarily high, and he does not want to sign a voting agreement being on the board to tie up him and his firm's stake until this deal closes. He wants to be able to sell it in 2025 without any restrictions. And the only way to do that is to resign from the board a few weeks before a deal gets signed. Okay. And then the third reason would be that he's not going to sell his stock when the deal breaks, but he just doesn't want to be on the board anymore. And the company, and they're going to hold their stock regardless, on the board or not on the board. Without going through the why I think so, to me, it's overwhelmingly likely that he has line of sight into a deal happening, right? It doesn't make any sense why this guy would want to blow out of all the stock on a break. He could have resigned after the break, right? It would have behooved him to stay on the board to negotiate and help push a deal through. If he's so interested in cashing out, he'd rather get 30, 35, 32, 38 than get 20 or 18. So he would just stay on the board to try to work towards that conclusion versus resigning when he knows his board seat is irrelevant at this point. He knows it's irrelevant because the board is filled with friendly board members now, right? I went into that in my previous YouTube, but the entire board is friendly. The three board members that were involved in the disastrous Omni purchase all resigned in May. There are other major shareholders on the board. And my final reason why I'm bullish on Forward Air is I think final bids probably came last week, not this week. And if the final bids did not result in a bid that will sell the company, I think we would have probably already heard that the process broke. We would have gotten a press release, especially because the board of directors member resigned August 28th. I think there's an unbelievable amount of transparency needed if they are planning on, if this is a broken deal. And I don't think any general counsel would be sitting on a dead process in the wake of a board member resigning, if that was the case. So I still think there's probably like a 90+% chance a deal happens here. I don't know what the price is going to be. It's a very levered company. Each EBITDA multiple is like $8 or $9 a share. So is it 32? Is it 31? Is it 35? Is it 38? I have no idea. I own Common. I own a ton of call spreads. And I think that's going to happen soon. It could happen next week. It could happen Monday. It's very levered though. So if the deal does break, it's going to go to $20. Okay. I just can't really see in what world that happens. You had 5 bidders originally. One of the bidders is Clearlake, and they own 12% of the company. They're like $100 billion private equity firm. Clearlake's bidding. They filed a 13D saying they were bidding. And Clearlake has owned this stock for 2 years. So to me, at the very least, they're going to have a clearing bid, whether it's 32, 33, 31, 35, whatever. They're in it, and they're in it to win it. And I don't think the board can reject any price. And if it ends up being that Ridge Capital, which is the other large shareholder on the board, that was part of the Omni deal. If they don't like the price that Clearlake is bidding, they can roll their stake in with Clearlake. And that's how this saga ends, I think. So yeah, you could wake up with a shitty price, but we'll get a deal. What else? Crows, KROS. Not going to really talk about that. I expect imminent news there. I would think in the next 2 to 4 weeks at the latest, we should get our capital return news. I would expect it to be a tender, but I could be wrong. And we just wait. We wait there. Oh, let's talk IMVT a little bit. So I have made IMVT a very big position again. It went from being like a 1 or 2% position to now it's a 12% position. I've talked about IMVT before on here. I won't go into too much detail about what IMVT is. Excuse me. It's a single asset company controlled by Roivant, ROIV. And there's a real history with Roivant and IMVT. Before Roivant went public, they issued a 13D saying that they wanted to take Immunovant private, kind of do a reverse merger, consolidate the businesses. It failed. Roivant went public through a SPAC. Fast forward to today, Immunovant has been a disaster. I'm not going to go into too much information about the background of Immunovant. You can go to look at their decks on their website. But the long story short here is I think Immunovant has tremendous value. Most of their events won't happen until 2027, and they'll need more capital sometime in 2026 to get there. They say they're funded through 2027, but it's kind of bullshit. They're going to need more money. Roivant owns like 55% of Immunovant, and it's my belief that Immunovant is much higher in a year from now, and much, much higher 2 years from now. And I think you have low risk of downside, and I like it because I think you can get long-term capital gains on it. If you buy it today, the catalysts aren't going to come for a year or two, and you have that outside chance that Roivant tries to take it private again. Well, they would roll it into Roivant. And I would say there's probably at least a 25% chance of that happening over the next 12 months if the stock stays where it is trading at today. So I like Immunovant. And, I'm surprised it's at $16. SGRY, it's a much smaller position now. It's like a 6% common position. I'm not even going to discuss it really anymore on here. It's a broken idea. I don't think you're going to have anything happen there in the next six months. Maybe starting in Q1, Q2 of next year, you could see Bain try to exit the company again through a strategic sale, but nothing's going to happen in the near term there. I think that's about it, right? I don't have any other updates. I still own PLYM, that's small. I still own SRPT, that's small. I still own SCPN, of course, that's small. PTGX, BBIO, they're hodlers, not doing anything there. KROS, speculation of the tender price. It doesn't really matter because they're going to try to get it fulfilled, right? They want to return the whole $375 million. So they might have a headline price of like $20 just to make sure they can get it complete. The beauty of a tender offer is, let's say KROS does a $20 tender offer. Well, 5% of shareholders probably won't participate because usually that's what happens with any kind of tender offer. It's usually low to mid, somewhere between 3 to 4% and as high as like 9% of shareholders probably will not participate in the tender offer. And that's free money for you and me because we will be able to over participate versus if a dividend happens, everybody gets it automatically, right? So you will overcompensate for their loss and you will make more money as a result of them not tendering. It's really hard for me to play out what happens there, right? 8R1 put out a letter in August and they're still pissed off at them. And they said that they're going to run a proxy next year if they don't do something with the Takeda CVR, or turn Takeda into a CVR or potentially return more capital than just the 375 million. So I look at KROS as a low risk, very good IRR over the next 30 to 90 days, right? I think you'll probably make somewhere around 10% total return on when the tender completes. That's me calculating where the tender is going to go off at, and then also where I think it'll trade post tender. So there's worse things you could do than make a 10% IRR. Sorry, a 10% gross return in, call it, 60 days with an imminent catalyst, which is them announcing the tender. There's no options I like. None. I sold a ton of vol in September, and I talked about that on here, and that paid off very well. I was short 1250 puts, 15 puts, and I'm short some 15 calls against my common, and all of it's worked. Now all the vols collapsed, and I don't really see any option plays. I just like owning stocks. So we will tender and then maybe buy back in after to try and get to Chiquita cash flow. Exactly. You will max tender, almost certainly. And then, yes, depending on where it's trading after, you might buy back more stock with your new money from the tender, would be the idea. And if they dividend it, you don't even have a decision to make. You'll then just have to decide whether you want to buy back the stub. So I'll do a whole YouTube on that after they announce the capital return and tell you what I'm going to do. All right. I think that's all. Thank you all. I don't know why I'm thanking you. You guys don't do shit for me. Thank you, Matt. No, I'm just kidding. Anyway, thank you for the camaraderie. Arvinas, yeah. You know what I have. You know what my views of Arvinas are. I'm not positive on it. Just have my small number of October call spreads left. And every day I wish I had nothing on. In fact, I sold some today. I sell a little bit every few days. Hate that stock. All right. Peace. Have a great weekend, everybody.